Well, hello, as I said before, I am Jonathan Klein, and this is our weekly webinar at PlusOption. As any webinar, we will start this webinar as well with a market wrap, basically what happened in the market in the last week. We will start without stocks. We'll talk a little bit about the market, more about things that happened today. Uh, First of all, before we will see any chart, I just want to talk a little bit. Today we had the ECB meeting with Draghi, and as we all aware of, interest rate in Europe stay the same around 0%. But what's more important regarding that is that we see that the euro is keep on getting stronger. Right now, as we speak, the euro versus USD is up more than 0.4% and is standing at around 11.566. More than that, let's just step aside for a second and talk a little bit regarding oil. As you remember, we talked in the previous sessions regarding commodities and regarding oil and how it stood in the previous support that he had around $42 a barrel. We saw that the market stood quite strong in this area over here. As you remember, when we talked about support, talked the previous time that he met that area, it stood very, very strong over there. Right now, by the way, the main reason for those things that we see in here and the strong support that we have in oil is more regarding the data that came out in the United States. We see that in the crude oil inventories, the event that we have every Wednesday regarding tells the amount of crude oil that we have in United States, that the supply is getting low and low and lower. And by that, the effect that we have almost every Wednesday is that the prices of oil keep on showing up. What's important over here, just that you will be familiar with this chart that we're seeing right now taken from a site called investing.com. This is a daily chart of crude oil. What's more important right now when we're looking at, this is the chart of crude oil, and there is a chart also of Brent oil. The main difference between them is $2, usually between $1.5 to $2 a barrel. As you can see, this one around 47.6. The other one should be around $50 a barrel right now, more 49.5. When we're looking at target rates regarding oil, we're expecting it to keep being kind of strong. Right now, we want to see the Brent oil stand around $50 a barrel, stays over there, and after that, it will probably reach 51.8, and after that, 52. So for you long-term traders, it seemed like a good opportunity for a call position regarding oil. I will keep on saying for the long-term trades, and when I'm talking about long-term in this deck, we're talking about more than a week. The second thing that I want to talk about is regarding the S&P 500, or basically just the American stocks market. As we know, lately the American stock market is breaking records, all-time records. And this chart is kind of interesting. The chart that we're seeing right now is the S&P 500 Tech Sector Indicator. For those of you who don't remember, the S&P 500 represents 500 of the biggest companies in the United States. The S&P 500 Tech represents only the tech company, such as Netflix, Google, Alphabet, and etc. Now, let's keep in mind, we don't have the banking industry in these indices and a lot more other indices, only the tech one. What we've seen here is that the prices, it's the first time since 2000, 2001, 2002, that the indice reaches those high peaks, that it broke them. And this is the first time in 17 years that we see a thing like this happen. Now, we have a lot of talk regarding bubbles that are coming up and new in the market. The second conversation that we have a lot is what happened exactly in the S&P. When we say, okay, look, all the major indices in the American market broke record, what exactly does it mean? Because as we know, when we take a look at the banking industry, for example, the prices are not so high. But when we're looking at stocks like Facebook, Google, Alphabet, Netflix, Nvidia, all those big new companies, Tesla as well, we see that the prices kind of went a little bit too high, maybe. And that's usually the conversation that we have right now. Although after the beginning of the earnings season, when we see the report for companies such as Netflix, and today we will have Microsoft, we will talk about it. We see some strong movement, and the raise wasn't false. Well, the point over here that we have in is, yes, indeed, most of the raise that we saw in the S&P came from those stocks like Google, Netflix, Alibaba, and etc. But the question here is, are we in the same situation just before the bubble? Yes or no? We all already know how the year 2000, 2001 ended with a very strong collapse in those indices. Right now, I'm thinking no. Basically, the main reason for that is all the cheap money that we have around. As we saw today when Draghi spoke as well. And let's just move over here to the Euro versus USD weekly chart. As we saw today, when Draghi talks, he basically told us, look everybody, zero interest rate is gonna stay in Europe. We know that in US interest rate is gonna be between, by the end of the year, I'm talking right now, between 1.25% to 1.5. I'm not really seeing above 1.25%, which still means for us some cheap money around, which is good for the banking industry and just in the industry at all. Keep in mind, when we're talking about the effects of interest rate, high interest rate is good for the banking industry because then the profit spread is grow and those companies profit more. But when we're talking about tech companies like Google, Facebook, and etc., they loan a lot of money. They get loans. And when you get loans, interest is not so good for you because you pay it. So maybe those things in the, I'm not saying nearby future, we're talking about the end of 2018, when we'll have real interest rate, we'll see some effect regarding those stocks. But still, keep in mind, you have companies like Apple, which have more than $200 billion in cash. So always both of those things have some direction with it. When we're talking about Euro versus USD, the reason that I'm showing this chart, as you remember, we talked before, and we said in the previous session, we said that we expect the Euro versus USD to reach 1.16, which is basically around here. This is a weekly chart. And yeah, we see the Euro going through those prices. Probably in the next month is going to be over there. Now the question and the big question regarding it is, will it break all this area? The area of 1.16 is of a very strong resistance support. We kind of far from it, and we will get the answer to the big question that a lot of traders asked before. Where will you see the Euro versus USD? Will it pass this barrier or break down? I'm guessing that right now all this area is kind of out of the question. And let's remember that right now we have positive interest rate in United States, and we have zero interest rate in the Eurozone, which basically means that if you will open a call position in Forex trade, for example, or in regular trade, we're not talking about binary in this example. And if you will open a call position regarding Euro versus USD, you will pay swap in this situation. So basically that's telling us that when people open this position, they expect prices to grow and we expect it to keep on going up. From those who didn't understand why is that, it's basically because we have plus interest rate in US and negative interest rate in Euro, and the currency that I'm buying is USD with Euro, therefore I need to pay the 1%, almost 1% interest rate in United States, and we have zero interest rate in Euro in that case. So by that, the main reason that I'm saying it, that means that the Euro versus USD should go down by interest rate inflation. But interest rate is not very effective right now, and it's more regarding printing of cash and that effect, and basically on the strength of that economy. Well, let's go back to earnings season. If you don't have any more questions regarding it, wait a little bit for questions. Okay, I see that there are no questions regarding that, so let's carry on with basically what happened 2 days ago with Netflix report. Now, I'm guessing some of you received from their account manager the documents that we send as clients. If not, keep in mind, ask your account manager regarding the documents that we send prior to their report. We kind of estimated that the numbers with Netflix will be good. I don't believe nobody expected the numbers would be that good. The market anticipates around 3 million new subscribers in Netflix, and then the market received more than 5.2 million new subscribers. Now, if you all remember the webinar that we have regarding stocks trading, exactly how to trade with stock, we talked a lot about EPS and P/E ratio. And then we said at the end of it that companies like Tesla, Netflix, and etc., those numbers aren't really matter. In companies like Netflix, the only thing that matter is the amount of subscribers. So as you can see, we have 5.2 million new subscribers, which affected amazingly on the stock. And by the other way, the EPS of the company was less than expected, which we should, if you're trading only regarding that, we would expect something else. And I'm guessing you all heard a little bit what happened with the stock the day after. Eventually it moved more than 15% up, and I want to stop a second and talk basically about what happened over here. There is a group of stocks which called fund stocks. We have Facebook over there, Google, Netflix, and Yahoo, and Amazon, sorry. Those stocks dropped lately. For now, sorry, Apple as well. For now, we saw that they raised all the drop that we had in the market. As you can see, Netflix even overcome it. What's important for us regarding that is what exactly happened over there. A lot of people started talking about that chart that I showed you before. Just a second, I want to see it again. Of what happened in the market, all this raise. How did it really came through? Now, this is going to be a little bit tricky over here, but let's set aside and think about it. When we're saying, for example, that the S&P 500 broke records high, what does it mean? How would the S&P is really built up? You know, it's 500 companies, but what does it mean? That every company represents a quarter of a percent? No. We have companies like Google, for example, that represents around 5%. Companies like Facebook, which represent around 3.5%. So we have all those 5 companies combined, and they represent around 20% from that major industry, which just tells us that 20% of the movement in the S&P came from those exact stocks. So a lot of people talking about, really the American market is that healthy? Really what we're seeing tells us what happened in the American market, or it tells us what happened in those big companies, the companies that kind of starting to be too big to fail, if you're familiar from the crisis at 2008. Well, that's another question. Well, let's talk a little bit about the reports that we're going to have. And today we will have the reports of a company. I'm guessing 90% of you guys seeing this presentation with a computer have a Windows from some kind, in which this company developed it, Windows. The company called Microsoft. And basically, the main thing that they're doing is the operation system. I don't think that there's a lot to talk about Microsoft that people not knowing. Second thing important regarding is the Xbox. Now, when we analyze a stock like Microsoft, the important thing for us is profit, profit, profit. Okay, when we said regarding the P/E ratio and etc., it's important over here. When we're looking at a company like this, the only thing that we're looking at is how much the P/E ratio is growing. Sorry, P/E ratio will get lower, but regarding how much the profit will grow. Now, let's talk a little bit about what we expect and what we usually see in the earning report regarding those companies. Keep in mind the direction that we're talking about right now does not mean that the report will be good and then you should open a position immediately for tomorrow. We're talking about what will happen in the long-term view. And long-term, as I said before, is middle between this earnings season and the other earnings season, around month and some. There's an important data over here. I always think that it's kind of nice to know. If you bought one share of Microsoft around 86 in the IPO, you would profit around, and this is with dividend, keep in mind, around 71,000%. It's always funny to think about all those things. We have the same things with Warren Buffett company, British Hathaway, for example. You did a lot more if you bought a stock just at the IPO. But those are nice things to know, at least in my opinion. Well, first of all, this document that I'm showing you right now with the previous one and this part, you can ask your account manager and they will send it to you at one document. This is just over here like this. It will be a lot more easier to read. And let's go through exactly what we're seeing over here. I'm guessing, if you remember from the presentation regarding stocks, this is a chart of the profit of the company. To see it by yourself, you can just go into NASDAQ site. Basically, you can just write in Google Microsoft earnings report. This is the site, the first site that you will see, and then you have those numbers. Now, this is the chart that we have usually, and after that, you can check at Yahoo Finance to see exactly the prices target that we're talking about over here. Now, we're seeing that in the last report, for example, of Microsoft, the day of the report, this was the closing price. Now, why it's important when I'm saying the closing price? Because not in this case, but it could be cases that the price at the middle of the day were higher than the closing price, and if you will open a position immediately for the day after, you would have lost. So this is the closing price, the moment of the closing, this is the price that we had in the market, and then we have the open price, as you can see. But what's more important, at least in my mind, is the 5-day close price. And as I said, this is because of usually that's the way people tend to trade. I will recommend, if you're trading based on the earnings season, is to open a trade for more than 2 or 3 weeks regarding that position. And basically here we see the movement in general in all those 4 columns. I will recommend you, if you are not going to ask your account manager for those charts, just to do a print screen right now, to take a picture of it, that you won't need to look for those prices by yourself. And basically when we're talking about a company like Microsoft, it's probably one of the best long-term trades, a call position regarding them, in general more than a month, or buy that as well. And when we're looking at those companies, we have Microsoft, Google, and Facebook that are probably a must in every portfolio, stock portfolio, regarding a binary as well. But keep in mind, we're talking about a very, very long term. Well, this is the effect of the stock. The second company that Microsoft reports today. So if you want to trade with it, it's the today. Now the American market is open, so you should open the trade around those moments. And Alphabet, which basically all of you familiar with as Google, when they change their name, will report next week. I'm guessing Google as well as Microsoft, there's not a lot to say regarding it. She as well, one of those FANG stocks. Important data, interesting data, at least in my mind, regarding that company. Just that every minute, for example, we have 2 million search in the Google bar, or another thing that in YouTube, every day, people uploading videos of more than a lifetime that you will be able to watch. And we're talking about per day. Just think about the amount, and basically everybody is touching this out, and its effect as well regarding the profit of that company. The second thing is the expectation of the market. Right now we expect around 8, some people expect around 8.2 bucks a share profit, but that's by that. And another important thing, Alphabet is one of the biggest companies around the world. Right now, as we all know, we have some competition between Alphabet, as we said, Google and Apple and Yahoo and Amazon, sorry for that. All 3 are kind of in a race to be the first $1 trillion company. And by that, let's carry on and take a look exactly at the chart of what happened. Let me just clarify before I forget. As you can see, this drop that we had over here, we had the same drop in other companies as well, as we talked about. This is the FANG stock drop, as we talked about companies like Facebook, Alphabet, Amazon, and etc., which had that drop. As we can see over here, Google is Alphabet, sorry, is kind of one of those companies that almost every time after the report, the stock rises. Of course, if we'll take a look of 2 months in advance, yeah, that's amazing what we've seen over there. And this is, as I said before, in the beginning, it's kind of the best stock to hold in the long term. But if we're talking about the effect immediately of that day, yeah, it's kind of different. And as I said before, when we open a position, we expect it to be for more than a month or 2 months. Of course, the easiest way to trade is after the report, but in those minds, we need to keep it exactly, for example, what happened with Netflix. Immediately after the report, Netflix went up around 12%, and every trader could tell to himself, okay, look, this is a great report, and to open a call position to the end of the day, for example. In Netflix case, that's probably would be a good idea because the stock at the beginning rises around 8% and then it closes the day around 12% and above. But I less prefer it regarding that. The second stock that I want to talk about, and it's kind of the most important stock in my mind, that report is Facebook. I'm guessing Facebook as well regarding all the other major companies. There's not a lot to talk about, but what's important regarding Facebook? Uh, Basically, a lot of people expect them to beat the market again and again and again, and by that to trade on it. And when we have something from Facebook and Google is kind of like it as well, that we don't expect, that we expect better, the stock dropped. People throw the stock to the trash when they don't get what they expect. Another important data, just for Facebook, we have it every earning report. We have almost 2 billion users in Facebook. This is amazing when we think about it. It's mean around 1 out of every 4 people is using Facebook. And another important thing is that Facebook usually worldwide profit, sorry, not profit, the revenue is around $4 per every client. When we do a little bit of calculation, we receive that from the income is around 8 billion just from clients. Now, do you have more profit from people who pay them to advertise and etc.? Just think about those numbers. For example, Google, around 98% of our income is just from commercials. So it's always kind of nice. We can see that Facebook as well is trading around $470 billion right now. And Facebook is a company without a lot of cash. This is kind of interesting to think about when we compare to a company like Apple, for example. Apple is traded at a value around $650, $700 billion, and Apple have cash around $200 billion. Okay, so usually we need to get that cash out, and then it tells us basically that Facebook and Apple, regarding only value, are trading kind of the same. And think about it that Facebook is just a software company. They don't really have devices. But this is the new age, but as I said before, there's always a nice thing to think about, at least in my mind. Well, as we can see regarding Facebook, basically we've seen that every time after the last report, and basically just because in the last report, the numbers were exactly as expected, the market didn't really move. By the end of it, it finished a little bit below. And in binary, as we know, we need just a little bit to win or to lose. And in that case, what we have over here is if we would have opened a position at the beginning of the day, for example, we probably would have won. But because the market was in anticipation for the result and expected a good result, even better than expected, as we usually use from Facebook, we saw what we saw. The same situation exactly could have happened in Netflix, for example. In Netflix could have collapsed if the numbers were a little bit shy of 3 billion. Also, 3 million is a good thing, but that could affect it as well. Well, as you probably noticed, we're kind of bearish on the market right now regarding at least those stocks. We're expecting good results. And as I said before, in the long term, and it's not really surprising when we think that everything around the market right now is kind of in the good mood. I want to finish with a talk about Apple. Apple is going to report in the next 2 weeks on the 1st of August. And right now we have kind of a strange thing in Apple. The first time in 3 years, Apple have more than 9 days of finish higher than the opening. Now, basically, it's telling us that every day right now with Apple is a better day than the previous day. And this is kind of a strange thing, an important thing, and it tells us a lot regarding what we're expecting from it. And more than that, and the main reason that I'm showing you that, as you remember, we talked before about the drop that we had in the FANG stock. This is what we had over here. More than that, the main reason why I'm talking about what's going to happen. As I said, Apple is going to report in the next 2 weeks. Now, if the stock will be a lot more higher, it's easy, always easy to tell about Apple. Apple will have a good report. We expect that they have a new phone. And people will talk about it as well. It's kind of an easy trade usually. But if the stock will keep on going up without a little bit of a correction before the report, it will be a lot more harder to identify the direction, to open a trade before the report. After the report, the sky's the limit. Nobody could know really before it what will happen after it, and the effect in the medium term of a week or two. Well, this is the end of this webinar. I hope that you get some ideas for trade from it. Feel free to write any question that you have right now. When for any other question, feel free at any time to contact me with the mail that you have over here, or contact your account manager regarding any question. Feel free to write the question over here. And I'm Jonathan Klein, and I'm here to answer it for now. I will answer the questions in the chat if you would like. For now, I want to thank you for your time.